Hello and welcome to the weekly wrap. So just in terms of the order of what we saw things unfold this week, so very much at the start of the week it was once again all eyes were very much on China, with some of the weekend reports suggesting that Chinese authorities had removed some of the previous measures which had been in place to help support the stock market. And these reports were also coupled with some disappointing PMI data, which did show the manufacturing sector in China in contractionary territory. So the first part of the week was very much focused on China, with dampened sentiment, very much the key theme in the market. However, thereafter, as China exited the market on Thursday and Friday for their Victory Day holiday, a lot of the focus very much did centre around the ECB and the non-farm payrolls report from the US. So just in terms of the ECB then, as expected, we did see the central bank keep all three key rates unchanged. And as has been the case for the past few months now, all focus was very much on the press conference. So Draghi did kick things off with a more dovish than expected start by straight off the bat increasing the share limits for the ECB QE programme from 25% to 33%. And thereafter he did downgrade growth and inflation forecasts from 2015 through to 2017. And the interesting thing on this front actually is that the reference point for these forecasts only went up until August the 12th, so very much missing out some of the recent volatility that we've seen in the markets, including the notable Black Monday. So thereafter in the press conference, Draghi did stress there could be significant downside pressures to these revisions. So all in all, very much more dovish than anticipated, with Draghi also stressing the programme could run beyond September 2017 if necessary. So then, just in terms of today's non-farm payrolls report, we did see a miss on expectations for the headline. However, we did see an upward revision to the previous, lower than expected unemployment rate and better than expected wage data. So all in all, not a bad report, and despite the miss in the headline, it isn't going to be enough to potentially sway the Fed from pausing a potential September rate liftoff if that is the current train of thought in the Fed. All in all, that's pretty much where we stand at the moment, and just as a reminder, the US will be away from markets on Monday, given it is the US Labour holiday. But that's all from me, and thank you for watching.